Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Nike stock, ticker symbol NKE. Nike reported earnings last week. Make sure you stick to the end of the video for my opinion on this stock. So Nike is currently trading at $93 per share. Past year up 11.44%. Past 5 years up 75.18%. Market cap is $145 billion. P ratio is 58, and dividend yield is 1.02%. So overall, in terms of what the bulls say, they have a lot of opportunities for growth in China. More than 70% of Nike's growth over the next 5 years come from outside of North America, so a lot of international growth. And their triple-double strategy is really helping their growth, increase innovation, direct-to-consumer sales, and speed, improve the margins and share, and also the growth in digital channels, and that'll improve the gross margins. Now taking a look at what the bears say, what the negative naysayers say. So current climate has forced closures of Nike-owned stores. So a lot of the physical brick-and-mortar stores are impacted, and Nike's exposed to changing retail landscape in the US. So we'll see what the next couple months, next year will look like as retail changes over time. Now, as mentioned, earnings last week, actual earnings per share was way under expected EPS, so negative 51 cents versus expected 9 cents. That's a drastic difference, so it definitely underperformed this past quarter. Now, taking a look at the financials, you can see annually it's been steadily increasing ever since 2017. 2020, it took a slight dip, and earnings also took a slight dip. Now, if we look at quarterly, it drastically dropped relative to last quarter, Q1. Same goes for their earnings, negative $790 million. So that's not too good. Now, looking at the key stats of Nike, you can see their market cap is $145 billion. P ratio is 50, and forward PE ratio is 35. So hopefully they do better next quarter. Their 52-week change is 9.67%, so that's one year versus 52-week change for S&P 500. So it's definitely overperforming, doing better than the overall market. Now for share stats, you can see held by institution is 85%. So a lot of institutions are holding this stock, whether it's in ETFs or other institutions. It's a lot of holdings are under institutions. Dividend yield, they are paying 0.94%, and forward dividend yield of 0.97%. So good to see that they are increasing their dividend yield. And payout ratio is 34%, so it's good to see this number under 50%, and we know this is a sustainable dividend yield. Now for profitability, they are profitable with the profit margin of 6.79%. Management effectiveness, return on assets is 7%. Return on equity is 29%. The revenue is $37 billion. So that's definitely decreased quarterly revenue growth, down 38%. Gross profit is $16 billion. The earnings before interest, tax, depreciation, and amortization is $3.78 billion. Net income is $2.5 billion. And you can see quarterly earnings growth. It's not displayed here. Now, their total cash balance is $8.79 billion. It's good to see that cash to sustain their business during these tougher times, and understanding that Nike is a more cyclical business in the consumer discretionary sector. It's always good to see a larger cash position. Their total debt is $13 billion. Debt to equity is $161. So for every dollar equity they have $161 in debt. Now taking a look at the actual reports direct from Nike. You can see that Q4 revenue was 6.3 billion, declining from prior year. And then their digital sales increased by 75% in the fourth quarter. So a lot of their revenue was generated from digital sales, and that's probably due to the closure of a lot of their physical stores. Now for fiscal year, Greater China revenue increased by 8%. So as I mentioned, they have a lot of opportunities for growth internationally. So good to see that China helped them with their revenue growth. Now taking a look at the income statement review, revenue decreased 38% for this past quarter. Gross margin decreased to 37%. So overall revenue and gross margin decreased, so it's slightly dipping as we mentioned earlier. And selling administration expense decreased by 6%. Effective tax rate was 1.7%. Net loss was $790 million. And this was due to lower revenue and gross margin. Now for fiscal 2020 income statement review, the story isn't much different. So the revenue is also declining by 4%. Gross margin decreased by 43%. So overall, you can see that their revenue, gross margin is decreasing, and its forward-looking is also decreasing. Inventory was up 31% compared to prior years, so they're not selling their inventory as fast. Total liquidity was 12.5 billion. They have robust cash and equivalents for any short-term volatility. Now it's good to see that they're still returning to the shareholders through dividends and share buybacks. They have a strong record of investing to fuel growth and consistently increasing returns to their shareholders. So dividends will be 1.5 billion compared to 1.3, so it's good to see that increase. And their share repurchases will total to 3 billion for fiscal 2020, reflecting 33.5 million shares retired as part of the fourth quarter. So hopefully that will increase the earnings per share. But typically when there are share buybacks, that artificially increases the EPS. So overall, I think Nike is going to encounter some headwinds in the next couple quarters due to lower revenue and gross margin. And I think even though Nike is they're seeing a lot of growth in their digital space as well as international sales, I think Nike will continue to struggle the next couple months because physical stores, they're losing a lot of sales from there. And overall, the macroeconomics are not looking too well. And I think, so in terms of my exposure to Nike, it's only through ETFs, through the S&P 500 ETF, Vanguard, VOO, and I don't have any individual stocks holdings in Nike, and I don't plan to start any position anytime soon. I will continue to hold the ETF to get exposure to Nike, and this is a more cyclical stock. So if you want to hold this for the long term for their dividends, you would have to have a very long term growth outlook rather than the near term future. So buy with caution, and I personally won't start a position anytime soon. That's all for this video. What are your thoughts on Nike? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.